and welcome to the InMode Limited First Quarter 2021 Earnings Conference Call. All participants will be in listen-only mode. Should you need assistance, please signal a conference specialist by pressing the star key followed by 0. After today's presentation, there will be an opportunity to ask questions. To ask a question, you may press star then 1 on your touch-tone phone. To withdraw your question, please press star then 2. Please note this event is being recorded. I would now like to turn the conference over to Miri Segal of MSIR. Please go ahead.
Thank you, operator, and good day to everybody. I would like to welcome all of you to InMode's First Quarter 2021 Financial Results Conference Call. Before we begin, I would like to remind our listeners that certain information provided on this call may contain forward-looking statements, and the safe harbor statement outlined in today's earnings release also pertains to this call. If you have not received a copy of the release, please view it in the investor relations section of the company's website. Changes in business, competitive, technological, regulatory, and other factors could cause actual results to differ materially from these expressed by the forward-looking statements made today. Our historical results are not necessarily indicative of future performance. As such, we can give no assurance as to the accuracy of our forward-looking statements and assume no obligation to update them except as required by law. Moshe Mizrahi, InMode's Chairman of the Board and CEO, will begin the call with the business update and pass it over to Shakil Lakhani, InMode's President of North America, to discuss our North American operations. He will be followed by Yair Malca, InMode's CFO, with an overview of the financials. We will then open the call for the question and answer session. I'll now hand over the call to Mr. Moshe Mizrahi. Moshe, please go ahead.
Thank you, Miri, and thank to all of you for joining our first quarter 2021 financial results conference call. With me on the call today are also Dr. Michael Kreindel, our co-founder and Chief Technology Officer, Dr. Spero Theodorou, our Chief Medical Officer, and Rafael Lickerman, our VP Finance. All of us will be available for Q&A later. In the first quarter of 2021, InMode generated revenue of $65.5 million, a 62% increase over the first quarter of 2020. First quarter record net income on GAAP basis was $26.6 million and $29.3 million of net income on a non-GAAP basis. In Q1 2021, we derived approximately 69% of our global revenue from InMode proprietary surgical technology platforms engaged in minimal invasive and subdermal ablative treatment. 24% derived from our hands-free platforms and 7% from our traditional laser and non-invasive RF platforms. We are happy to report that all segments continue to grow. The impressive growth in the first quarter was driven by demand for our minimal invasive proprietary platforms and the hands-free platforms, as a growing number of doctors are using our system. In fact, during the past year, the number of consumables sold has reached a new record every quarter. Overall, we have more than doubled the numbers of consumables sold in the last 4 quarters. This is an indication of an ever-growing use of our system. We continue to see demand from new and repeat patients seeking to improve how they look and how they feel. On a global scale, we are working to duplicate our success in the United States by expanding our sales capability and engaging with new distributors and countries to expand our international presence. Since the beginning of 2021, we have added 5 new distributors and 10 new countries to our international network. Our excellent first quarter include international revenue growth of 123% year-over-year. as our revenue outside the U.S. grew from 24% in Q1 2020 to 33% in Q1 2021. Currently, our U.S. install base total approximately 4,250 systems, which represent about 53% of our worldwide install base of approximately 8,050 systems. While we expect continued growth in the U.S., we also anticipate even faster expansion in the OUS market, as we have yet to fully penetrate many markets across Asia, Latin America, and Europe. Our North American sales team consists of 135 fully trained specialists, and our global team totaled 156 individuals. As for our install base, we expect these numbers to organically increase as we expand our innovative technology to other parts of the world and enter new verticals. We are constantly working to get more regulatory approval across the globe to expand our product offering in each country. At any given time, we are engaged in at least 12 to 15 regulatory projects, all the way from Brazil to China. We are also expanding our verticals beyond aesthetic, as our R&D pipeline includes over a dozen projects for other medical areas such as gynecology, ophthalmology, ENT, urology, and several others. As part of our strategy, we expect to launch 2 new platforms this year in which our advanced bipolar RF technology will provide significant quality of life improvement. One of these platforms is called Empower, which we expect to launch in the third quarter of 2021. Empower will be the gold standard in women's health and wellness, and we are excited to announce that it has earned FDA approval for all of its applicators. Based on our successful performance in the first quarter of 2021 and the visibility we have into the rest of 2021, we are increasing our full year 2021 revenue guidance range to be between $270 million to $280 million. And we intend to maintain a non-GAAP gross margin of 84 to 86%. Lastly, we continue to support and augment our team worldwide while complying with all local and regional health and safety guidelines for the welfare of our employees and customers. With that, I would like to turn the call over to Shakil, our President in North America. Shakil.
Thank you, Moshe, and hello, everyone. We delivered an impressive performance in the first quarter with sales reaching an all-time high in March, as momentum for our minimally invasive and hands-free devices carried over into the new year. The strength of our capital equipment sales during what is typically a seasonally slow quarter was driven by underlying demand for our in-office-based procedures. This was demonstrated by another consecutive quarter of record consumable sales in North America, which more than tripled year over year. Doctors are using our systems with increased frequency, which is a great indication of the growing acceptance, endorsement, and implementation of our technology. In North America, we continued to build out our sales force and seamlessly integrated our new hires from 2020. Leveraging our online platform, InMode University, our sales team was easily able to disseminate and expand knowledge of InMode's leading technology and stay connected to physicians across the country. As a result, the team successfully fulfilled the growing demand for our products as physicians and patients pursued effective, easy, and frequently used social distancing-friendly aesthetic procedures in in-office-based settings. Additionally, our now fully staffed post-sales support team was a significant driver of our consumable sales growth this quarter. As mentioned, each quarter, the volume of consumable sales continues to grow, and we believe that this trend will continue. Looking further into 2021, we are excited to see a growing number of in-person events scheduled, yielding abundant opportunities for us to connect with the medical and aesthetic communities as we bring our solutions to the market. Concurrently, with the upcoming launch of our Women's Health and Wellness platform, we expect to introduce this technology to the women's health and wellness community later this year in order to build awareness and educate practitioners on the various medical applications available. Furthermore, we will continue to recruit industry sales talent over the course of the year to fuel our ongoing growth. We are extremely proud of our North American team for all the hard work and dedication they put in on a daily basis. Their ability to execute and maintain a positive attitude during challenging times in the industry and our world has been extremely impressive, and we anticipate this trend to continue as we move forward. Now, let me hand over the call to Yair to review our financial results in detail. Yair?
Thanks, Shakil. Good day, everyone. Total revenue in the first quarter of 2021 increased 62% year over year to $65.5 million, with a gross margin of 85% on a GAAP basis. The increase in revenues was primarily attributable to continued strong demand for our platforms in the beginning of the new year, highlighting significant growth in each of our technologies. Minimally invasive and subdermal ablative treatments grew 75%, hands-free platform increased by 33%, and laser and non-invasive grew 68%. The growth in each of these technologies exemplifies how we've learned to adjust and operate in a world with COVID-19 and maintain growth across the board. In addition, international sales have increased dramatically year over year as we successfully replicate our US growth strategy on a global level. Geographically, we saw the highest growth rate in Asia and Europe, which increased by 273% and 63% year over year, respectively. Our capital equipment accounted for 88% of our revenue, while consumables and service revenue were 12%. GAAP operating expenses in the first quarter of 2021 totaled approximately $28.7 million, a 1.5% increase from the first quarter of 2020. Sales and marketing expenses increased 6.8% in the first quarter of 2021 compared to the first quarter of 2020. Stock-based compensation decreased to $2.7 million in the first quarter of 2021 compared to $6.1 million in the first quarter of 2020. On a non-GAAP basis, operating expenses totaled approximately $26.2 million in the first quarter of 2021 compared to operating expenses of $22.3 million in the same quarter of 2020, an increase of 17.6%. GAAP operating margin was 41% in the first quarter of 2021 compared to 15% in the first quarter of 2020. Non-GAAP operating margin in the first quarter of 2021 was 45% compared to 30% in the first quarter of 2020. This increase derived from the March 2020 interruption of the sales cycle by the COVID-19 outbreak, and consequently, marketing expenditure did not result in sales at the end of the first quarter of 2020. Also, in the first quarter of 2021, marketing activities in the United States, such as event and conference participation, were still minimal due to public health restrictions prompted by the COVID-19 pandemic, and as a result, expenses were lower. GAAP diluted earnings per share in the first quarter of 2021 were 63 cents compared to 15 cents per diluted share in the first quarter of 2020. Non-GAAP diluted earnings per share in the first quarter of 2021 were 69 cents compared to 30 cents per diluted share for the same quarter of 2020. We completed the first quarter with a strong balance sheet. As of March 31st, 2021, the company had cash and cash equivalents, marketable securities, and deposits of $293.4 million. On a cash flow front, the company generated $24.8 million from operating activities for the first quarter of 2021. Lastly, I would like to highlight that this quarter we have implemented additional metrics, including a breakdown of our revenue streams by geography, category, and technology. This data is available in tables that accompany our filings. We believe that publishing this information will provide better transparency and will enhance investors' understanding of our business. With that, I will turn the call back over to Moshe.
Thank you, everybody. Thank you, Yair. Thank you, Shakil. Thank you, Miri. I believe now we have to start with the Q&A.
We will now begin the question and answer session. To ask a question, you may press star then one on your touch-tone phone. If you are using a speakerphone, please pick up your handset before pressing the keys. To withdraw your question, please press star then two. At this time, we will pause momentarily to assemble our roster. Our first question today will come from Matt Taylor with UBS. Please go ahead.
Hi, guys. Thanks for taking the question, and congrats on a really nice outcome here in the quarter. So I appreciate you mentioned that March was a record month for the company. I was wondering if you could talk about any trends into the second quarter and maybe just offer some views on, how long you expect this elevated demand that we've been seeing from kind of the Zoom boom or the pandemic lasting.
Shakil, maybe you'll start for North America, and then I will continue.
Sure, absolutely. Hey, Matt, how you doing? So yeah, I mean, I think obviously we expected some pent-up demand post-pandemic, but I think based on what we've been able to do and accomplish with our, we don't think it's really, there's obviously a lot of good things going on with post-pandemic demand and patients wanting to get things done, but I do think that sticking to the core fundamentals of the business that we've always kind of followed has just nicely kind of added in as we've added on different new talent and developed some of the people that we, when we went on our hiring frenzy. So I think it's kind of paid dividends moving forward. I do think that, moving forward for the rest of the year, I think we do anticipate to see similar demand from patients. But again, I think it goes back to the fundamentals of InMode and how we've always kind of operated that we've just kind of put our heads down and kept doing what we do best. And I think that's why we've been able to continue to show such good growth.
Hi, Matt. This is Moshe. April was a very strong month, internationally and also worldwide. I mean, usually, as you know, the second quarter is better than the first quarter as far as seasonality on this business. And we expect the second quarter to be strong as well. Although we have some countries worldwide like Canada, India, some of the European countries, and of course, Latin America, Brazil, and Mexico are not in a good shape. But I have to say that unlike March, April of 2020, people learn how to live with the COVID. And they don't stop seeing patients. Doctors do not stop seeing patients and do not stop working in the clinic. So maybe it's a little bit slower than in certain countries than what we expected. But as I said, April was a good month, and we believe that, for example, in Europe, now they start to vaccinate on a full scale. Things will get better in May and June, and the second quarter will be a good one as always.
Yeah, thanks, Moshe. So I wanted to ask one about your sales force and the addition of these distributors. It seems like you continue to expand in North America. I was wondering if you could give us a more specific update there. And can you talk about the expansion to these additional countries, impressive OUS growth this quarter? Do you expect that to continue, and are you going to be adding any other countries this year?
Yes, we're adding countries. Since the beginning of 2021, as I said in my talk, we added 10 new countries, relatively small countries, because all the big countries are already covered. And all those small countries are being handled by 5 distributors, mainly in Europe, 1 country in Africa, another 1 country in the Middle East. We do not neglect them, although they are small countries, but we believe that if our presence will be covered, now we're covering 63 countries, including our subsidiaries. In addition to that, as you know, we have bought out the partners in our joint venture company in China and also did in the UK. So now these two subsidiaries are fully owned by us. That will enable us to invest more in these two countries since we are controlling the companies and the distribution. And we would like to add in all of our subsidiaries more salespeople. The only subsidiaries which is now a little bit stuck is India. Everybody knows what's going on in India. We have a small subsidiary there, 6 people, but unfortunately, the situation in India right now, it's a standstill. Hopefully, within a month or two, they will overcome it. We support them with any help that they need. We do not fire them or not lay them off because we want to keep the operation. We see a big potential there. But in other countries like in China and Korea, we are growing fast. As far as establishing additional subsidiaries, yes, we have a plan for another one in Europe and maybe another one in Asia. Not sure if it will happen in the second quarter or the third quarter, but this is something that we're planning to do. Selling direct right now, most of our revenue coming from direct. I would say that if the international market cover $22 million out of the 65, $11 million came from direct operation and $11 million came from distributors. And we would like to increase the direct part as much as we can, since when we sell direct, we recognize the full value and we have a higher gross margin. That's the plan. Did I answer your question?
Yeah, that was great. Thanks a lot. Thanks for answering the question.
Thank you very much.
Our next question will come from Kyle Rose, who is with Canaccord Genuity. Please go ahead.
Great. Thank you for taking the questions, and congrats on a really strong quarter, everybody. I wanted to see if we could touch on one big picture question with respect to guidance, and then just a follow-on for some of Shaq's comments. So on the big picture, you've obviously got major products launching this year. Empower sounds like that's moved out a little bit from the Q2 into the Q3. So maybe just help us understand what your guidance really contemplates from the contribution of new products in 2021, and how that mix shift of the technologies between MIS to hands-free will shift to include the new Empower platform. And then Shaq, you talked about really the post-sales support team helping drive consumables. Maybe just help us understand what that team looks like and kind of the contribution you can expect that focus to have moving forward on the consumable side of things.
Shaq, you can start.
Yeah, so I'll start with the post-sale, and then I'll hand it off to Moshe to handle some of the guidance-related questions. So we actually have 2 directors of client operations who've done a phenomenal job putting together their teams. It's something that we couldn't, roll out just all at once. It had to be something that was done nice and gradual. So, as per my comments, our teams are fully now built out. We look to expand those as demand keeps on rising, as consumable business keeps going. But I think that was a major driver for what we've been able to accomplish for them and their teams. And it's, again, the main thing that we're trying to do for our physicians and for our owners of our equipment is to basically provide them with the ability to try and pay off their units as soon as possible, or generate the maximum amount of return on investment in the shortest period of time. We try not to promise anything crazy, but it is very important for us to try to do that. And in turn, just like anything else in life, if you do well on your first investment, you're going to reinvest. And we do have several physicians that are reinvesting with us because they're very happy with their first purchase and the support that they were given. Moshe, did you want to handle the guidance question for Kyle, please?
Yeah. The new guidance that we gave, $270 million to $280 million, are mainly based on the existing portfolio. Even if we will launch the Empower in the third quarter, which we will, sometime toward the end of the third quarter for the fourth quarter, we do not expect to sell many, because when you launch a product, you do a soft launch, and gradually you increase the numbers of users. You want to make sure that everybody is well trained. You want to make sure that everybody know the protocols. We want to publish studies, continue to publish studies on the product. We want to introduce the product to luminary doctors. It's a process. It's not a consumer product. It's not fire and forget. It's not something that you can put on the internet and then you get, I don't know, many millions of dollars of revenue. Every product that we launch in the U.S. first and then in Canada and then internationally, it's a gradual process, which we do it very carefully to make sure that there is enough training centers, to make sure that there is enough doctors that can help other doctors to do the first treatment. So I don't anticipate a lot of revenue coming from the Empower in the fourth quarter if we will launch it in the third quarter. But in 2022, hopefully it will become one of our important platforms in our portfolio.
I mean, Kyle, sorry, just to add a little color on that. Adding to what Moshe said, when it comes to Empower, we know that this market is a huge market. However, like everything we do at InMode, we like to approach it very calculated, and we don't want to rush anything. So we're going to make sure that patients are going to be able to get exactly what they expect. Physicians are going to be able to get the patients that they're looking to treat and help change their lives. And it's a gigantic segment that has had a lot of eye off the ball for the last few years now. So I think we're, like Moshe said, for 2022, I think we look at it as a very large potential. But for this year, with the current products that we have, the minimally invasive, the hands-free, and some of our traditional aesthetic, we have our hands full right now. So as we scale out and build out our sales force for the women's health and wellness, we do see some really good future upside that I think we're going to be able to capitalize on.
Okay, thank you. That's very helpful. And then just my last question was, I appreciate the updates as far as system placements, obviously making good progress there. Can you maybe just give us an update on the U.S. installed base? You've seen the really strong demand for consumables and procedures, both in your business, but then the broader aesthetics market. How much of those of that 4,050 account base in the U.S. is own multiple machines? How much is that is like core versus quote unquote non-core physicians? Just trying to really understand that, particularly as you launch these products that are going to expand into additional medical specialties.
Sure, Yair, did you want to chime in on that?
Sure. So we have 4,250 units installed. I would say that about 20% of our accounts has more than one system. And most of them, I can comfortably say that they are co-physicians.
Okay, great. Thank you for taking the questions today.
Thank you, Kyle.
Our next question will come from Jeff Johnson with R.W. Baird. Please go ahead.
Morning, guys. Good morning, guys. This is Dane on for Jeff. Thanks for taking the questions. My first one's kind of piggybacking off Matt's earlier. Just wondering if you can provide a little bit more insight kind of on the gating of revenue over the remainder of this year. I mean, even if we kind of assume fairly stable sequential revenue in 2Q versus 1Q, which I know Moshe mentioned 2Q seasonally higher, that even implies kind of year-over-year revenue growth of 5 to 10% in the back half of this year, if my math's right. So obviously we know 3Q recovered very quick and 4Q last year saw strong growth as well. But is that 5 to 10% growth kind of the way to think about the second half for now, or is that a little bit of conservatism applied in there?
I think the 5 to 10%. The 5 to 10% is not exactly the right way to look at it, because if you think about it, in the second half of 2020, there was a lot of pent-up demand following the 3 months of the ban of elective procedures that we had in the U.S. between mid-March to June, all the way to June. So a lot of the businesses was supposed to happen during this quarter was pushed out to the second half of the year. So I'm not sure to look at the second half of the year, it's the right way to analyze our business. It will be better to look at the full year picture. It will give you a better indication of what the growth would look like. Does that make sense?
Let me add to it. We have seasonality in our business. Of course, the fourth quarter is the strongest one, but the third quarter is the summertime. And in the summertime, certain territories are totally closed, like Europe and some others. And therefore, I said the second quarter is better than the first one, but the third quarter is slower. 2020 was not a typical year at all. So we cannot determine the seasonality based on 2020. 2020, the third quarter was strong because everybody was locked down for 3 months, and they wanted to go to work instead of going vacationing on the summertime. And therefore, I hope that 2021, hopefully, once the COVID will disappear, will start to be more typical year. What I said is that the second quarter is better than the first one. This is typically what happened in the aesthetic market. Now, the 270 to 280, this is what we see right now, based on visibility that we have. I just will remind everybody that we don't have backlog. It's not a backlog company. We don't have a backlog for the second quarter. Everything that we sell on the second quarter come on the second quarter. It's not something that we have a backlog and we start the quarter with that amount of US dollars as far as revenue. I hope that it's more clarifying it now.
Yeah, thank you. That was very helpful. And then my second question was just kind of be from a geographic perspective following up there. Just wondering if you can provide any details on markets that you think could be probably the most meaningful growth drivers for this year and then maybe even into next. Thanks.
Oh, okay. That's a good question. Well, one of the most important driver on the international market is the regulation per country. I'm sure you know that in the United States, there's one regulatory body, which is the FDA, but internationally, we're dealing at any given time with 27 different regulatory bodies, all the way from Anvisa in Brazil to CFDA in China. Now, we submit approval for all of our platforms, but it takes some time. Anvisa, it's the longest one in Brazil. China is becoming a very long process. I can tell you right now in China, we have only 3 out of our 9 platforms already been approved, and we're working on the other 6. How long it will take, we don't know. In Anvisa, the same, 3 out of the 9, and we continue to submit studies and application and all kind of tests that they require. Once the regulation is cleared per country, then you open additional market. It's not just territory. Even if you have the territory, it depends how big is your portfolio in this country. So the 3 growth drivers that we have internationally right now that most of the big countries are already covered is regulation, okay? And second, establishing a very what we need is a base of luminary doctors that will use the system and a training centers for other doctors. That takes time. Exactly the same process like we did in the United States. What I said in my talk is we believe that the international market, percentage-wise, will grow faster than the U.S. market. Because in the U.S. market, we started in 2015. Once we got the first FDA, on the international market, we started 3 years later, basically. We sold here and there, but we started to invest money 3 years later. And right now, OUS versus US is 66% versus 33%. I believe that within 2 years, it will be 60-40.
Okay, thanks. Just wondering, are there any specific countries that maybe you haven't touched on earlier or before that we could see kind of additional growth coming from?
Yeah. There's 4 countries which we believe in 2021 will deliver well for us. China, Korea, Brazil, and hopefully Germany. These are slow countries in 2020, and I hope that in 2021 they will deliver better. We invest heavily on those 4 countries because there is a big market there.
Okay, thank you.
Again, if you'd like to ask a question today, it is star then one to ask a question. The next question will come from Asaf Barel Chandali, who is with Oppenheimer. Please go ahead.
Hey guys, thanks for taking my questions. And again, congratulations on the exceptional performance. So I guess, kind of echoing other people's statements, we appreciate the higher level of disclosure on segment reporting. Staying here on international, we know it takes some time on, some of the approvals in other regions, and you made it very clear that Brazil and China are particularly challenging, but hands-free remains a very small portion of the international business. What kind of opportunities do you guys see over the long term in introducing some of the hands-free products?
Okay, thank you. Thank you for the question, Asaf. How are you? Yes, you're right. The hand-free devices are not yet penetrated on the international market, and the reason for that is that in 2020, the international market, all the way from South America, Asia, and Europe, were hit heavily by the corona, and we have decided internally not to launch this product, the hand-free product, in this country, and spend the marketing money that we wanted because we felt like the timing is not good. Right now, we're starting to do it again, and we take it into the countries. The Evoke and Evolve are not yet approved in most of the countries in Europe, Asia, and also in South America. We're in the process. For example, in China and Brazil, our 2 main markets, it's not yet approved, but it's in the process. In other countries, it's already been approved. In Europe, only part of it is approved, and we're still waiting for the approval of the others. But once we get the approval, country by country, if the opportunity will present itself as far as the status of the COVID, we will launch the platforms, these 2 platforms, Evoke and Evolve, and hopefully it will be the same success like in the United States. But the delay was made because of the situation of the COVID and because of the decision we made not to spend the marketing money that we had budgeted for the Evoke and Evolve on the international market, because we felt like we will spend the money, but the acceptance will not be as high as we want.
Okay, great. That's very clear. It's helpful. And this is a pretty broad question, but I imagine it will become of kind of increasing importance as we move forward. The company's demonstrated very clearly that it knows how to develop technology for the medical aesthetics market and deliver very strong sales performance on it. How should we be thinking about your approach to the non-aesthetics market, whether it be in terms of the target kind of use cases, how you've gone about selecting them, maybe if there are any kind of critical differences in your sales approach, and just any color there on how you guys would be looking to execute it?
Spiro, I think this question is for you. Can you answer that?
Sure. My understanding is, so the question is how we're approaching the non-aesthetic market. Is that your question?
Yes.
So I want to bring up the reminder that a large part of InMode's sales force came from Cynosure, and Shaq had actually commented on that in a little more detail and give some color. And that's important because both Shaq and I worked, with Cyno back in the day, and with the launch of Mona Lisa at that time, a large part of the sales force is really comfortable and used to actually selling that product in women's health. So, Shaq, you could certainly talk about that part. But as far as the the KOLs and the network we've put together to go into that, it's very different than aesthetics. You need some real heavy-duty research because the end aspects of what we're trying to accomplish are not aesthetic, they're more functional, like SUI and stuff like that. So about 2 years ago, when all the issues happened with the FDA, Moshe and the whole team doubled down on their studies instead of running for the gates, and that's what you're going to see coming out this year is the benefit of doing that. So investing in the studies, investing in the research, and accomplishing things we feel very strongly about going forward is going to be a combination of that. So a very strong KOL network that's already in place, and I say top notch, and an experienced sales force that's already done women's health and wellness in the past. Shaq, you might want to give a little color on that.
Yeah, so very good question. I think the main thing to understand is that we've always, although our consumable growth has been impressive and it's continuing, and we will continue to do that, we've always been a capital equipment company, and as long as we can provide physicians with treatments that patients are seeking, whether it's aesthetics or it's medical, that are cash pay payments or treatments, we know how to position that side of the business and how to basically help physicians generate additional revenue and income. So when you look at what's going on with reimbursements and managed care medicine, there hasn't been 1 year for I don't know how many years where reimbursements haven't stayed the same or gone down. Meanwhile, people have their overhead and expenses staying the same, or if not right now, increasing. And so I think as long as that still stays in place and things don't change on that end, which I don't foresee any of that happening, we're always going to have a place to be able to get in, help some of these physicians generate additional revenue to their businesses and to their practices, and at the same time helping patients achieve certain things that they want to do. So whether it's in the GYN market or the ophthalmology market or wherever we're going, we have a very good understanding of how to distribute this equipment. That's not an issue. It's a plug and play with everything else that we do right now. But I think, like Spiro said, a lot of it, and like Moshe said earlier, a lot of this is going to come down to building some awareness in terms of procedures and what type of treatment options that you can get out there. And we also have an expertise in that. So frankly, it's different. I'm not going to say they're identical. It's different, but it is a plug and play. And it's not our first time doing it because we have experience with that from previous products at previous companies.
Okay, great. That's very helpful. Last question on my end. Company's done really an exceptional job selling and kind of executing and performing throughout COVID. I'll just once again point out kind of some of the other medical aesthetics comps maybe struggling on a relative basis. What is the company doing in terms of online sales presence that maybe can carry through post-COVID?
Yeah, so, I discussed InMode University. Obviously, it's a platform that we have, which not only helps train our people internally, but it also provides physicians with updated techniques and tips and things that they can actually apply to their practices. So as much as I, would prefer to stay away from talking about other comps because I think we kind of stand out in our own way, I think from our perspective, the way we look at this is, it's actually back to business as usual pre-COVID in terms of our approach and how we're actually targeting and marketing to doctors. So we've made some changes to obviously cater to the new world, as you might call it. But at the same time, I do think it's very important to note that we are now seeing business and activity getting back to exactly or very similar to what it was beforehand. So, the online stuff we've obviously been able to do, like I said, with InMode University and getting that out there, and we invested in that platform, of course, and it's paid off very well. But you now have things, and I mentioned in my script, but in-person meetings and events, those things are starting to happen almost like back to business as regular, right? Different things that we're doing and just keeping people safe when we do have crowds of people. We've taken all these kind of precautions in terms of how we actually implement it into the business and our business world. So I think that's helped out, and we'll see it continue that way. And again, we'll continue to assimilate as things change.
Asaf,
okay. Yeah.
Another reason why we're successful now post-COVID is the way we treated all of our employees worldwide. Some of our competitors, without mentioning name, when the crisis started, decided to save money by firing their salespeople, R&D people, and others because they said they don't know what will happen. We decided differently. We decided that we want to keep everybody as a family, even if it will cost us money, and even if for 3 months we did not sell. But we continue to work, as Shakil said, on training on the InMode University. We continue to develop product. We continue to train the sales team and the doctors on a virtual way, and we waited to see what will happen. And once the crisis on June last year start to show some, endpoint, it was like a bullet train. Everybody went to the market and capture market share, while the other competitors, or what you call the comp, start to hire people and retrain them and lose another 3 months. I think that was a very good and important decision in the United States made by Shakil and supported by myself. And and the payback, we see the payback post-COVID in a big way.
Okay, great. Yeah, really credit to you guys, really the whole team for pulling through a very difficult period. And with that, yeah, thank you very much for the call. Thanks, guys.
Appreciate that. Thank you.
Thank you.
Our next question will come from Stephen K. with Steve K. Financial. Please go ahead.
Thank you very much. I'm one of your users in the United States called the Rose Clinic, and it looks like they've got some kind of a dual approach in helping some of their clients. There's a product called Renuvion Skin Tightening that they're using with the Morpheus 8. Do you have a product like the Renuvion that could compete with them so that you are capturing that both processes that are being offered to their clients or patients?
Yes, we actually do that. I'll let Dr. Theodoro comment on that a little further here.
So radio frequency, what we specialize in, of course, and our body type platform is our star product, right, which we started off with and what our patents protect, which is bipolar radio frequency. The biggest differentiator here is you're able to control the temperature, acquire it and control it, and taking that energy and causing skin tightening and contraction or tightening. So, of course, there are other companies that are trying to do the same and follow in that line. But unfortunately, when you don't have an endpoint and a temperature, scientific temperature that that you're getting tightening, you're basically all over the place. So there's definitely, when you're in the front and you're leading and you're putting a lot of effort into research, there are going to be companies that are trying to come after us and trying to duplicate that sort of thing. So very different product from ours in that respect. So not necessarily, what I would recommend for my patients, because I'm also a practicing plastic surgeon. So to answer your question, certainly that company, interesting product, but they have a long way to go to catch up with what 10 years of research we put in place to accomplish what we needed to do.
Okay, thank you. One follow-up, if I may. The pharmaceutical companies are advertising heavily and have been doing so for some years directly to the public with the apparent result or hoped for result being that those patients will then go to their doctors and say, do you have such and such a drug that you can, I saw advertised on TV, it looks like it's a great drug. Is that type of marketing to drive sales to your physicians been considered?
Yeah, great question, Steve. So we're never, if you look at our balance sheet, we're never going to be that company that's going to spend more than what we make, right? It's not the fundamental DNAs of our company. However, we do, if you look at some of the celebrity endorsers that we've had in the past, Paula Abdul, some of the other organic ways of now using social media to really grow the business and doing that for our physicians is definitely a big part of what, I mentioned earlier with the post-sale support team. They're all over that. So we definitely do take an approach. Again, we're not going to be the company to go out and spend more than what we can make, throwing all kinds of money at advertisements and this and that. But I do think that we've spent a lot of time actually looking into those types of things and how we can effectively get direct to consumer in the smartest and quickest ways possible. So I think we've looked at some of our options that we have, and we've started to utilize them. And if you look at what we talked about through our consumable growth, the reason it's doubling and tripling over time is simply because we are starting to apply some of these things in there. Does that answer your question?
Yes, it does. With 10 million Americans turning 65 every day, seems like your market has got a long ways to go.
We hope so, Steve.
Well, I think it's important just to add some color here. The holy grail of plastic surgery is the ability to tighten skin without causing scars. And there's no one that's gone farther along that path. We're not there yet, but we're farther along than anyone else. So that's something that's a take-home message as to where we're heading and what we've done so far. And that's why it's resonating so well with physicians. And especially to your marketing question, we allow the physicians, when they have a good product and the patients like it and they're getting results, they push it out on their own social media, on their own channels. And that's a lot more effective because first, it's true. And second, it saves us money in many ways because we allow our customers to speak for us. So going down the road of a huge budgets for consumer marketing, certainly companies have done it successfully. But I think that getting an organic base and foundation of what we're doing, serving adoption, is actually quite effective. So we're quite content with that.
And more credible too, I would add.
Sure.
Thank you.
You're very welcome.
And
Ladies and gentlemen, this will conclude our question and answer session. I'd like to turn the conference back over to Moshe Mizrahi, CEO, for any closing remarks.
Oh, thanks. Again, thank you all for joining our in the first quarter earning call. I want to thank to all of our employees worldwide. They help us to achieve what we're achieving quarter over quarter. I also want to thank our investors for the trust they're giving us. I hope that we will continue to please them and to deliver what they expect. I want to thank my management team with me on the line today who participate in the call and helped to facilitate that. I want to see all of you again in August in the second quarter earning call, which probably will be on the first week of August. Thank you for everything. Now I will return it to the operator.
The conference has now concluded. Thank you for attending today's presentation. You may now disconnect.